what would you consider the most valuable asset that we have on this earth as individuals?
I mean, I guess I would say human potential.
Yeah, I think that's definitely up there. What I would say, what some people might say is time, right?
Yeah.
Our time.
Yeah.
Right? Our time is the most valuable thing that we have on earth.
And we
right?
all have the same, well, we don't know how long we're going to be here, but we all have 168 hours in a week.
Well, and I would say, the reason the way I derive that is by saying the reason that time is valuable is because it's finite.
Mm-hmm. Yeah.
Right? Our time is insanely valuable because it is finite. We know that we are going to die at some point undetermined in the future,
mm-hmm.
right? And it's that same reason, I believe, that makes Bitcoin incredibly valuable is because it is finite. But when you think about it, we have a finite amount of time on this planet, right? And we trade that time 40 hours a week in exchange for a currency unit, right? So we are trading our time and energy in exchange for this dollar, right? Yeah. Yet some unelected official or some government entity can print those dollars without putting in any work whatsoever, right? Which basically, in my view, is the act of robbing us of our time and energy. Yeah. We are being robbed of our time and energy when we're working for these dollars and putting in proof of work that some third-party entity can print out of thin air.
Welcome to Housing Matters, the podcast that covers everything real estate, from buying your first home to building your investment portfolio. Hosted by me, Matt Pouliot, Pouliot Real Estate. Each episode brings expert insights, smart strategies, and real talk on housing and affordability. If it's about real estate, it matters here.
Today, I'm thrilled to have joining us Jeff Truchon with Sovereign Wealth Management. Jeff is a friend of mine, but also in a lot of ways, a person who has really opened my eyes to alternative investments, particularly around Bitcoin. And I'm really thrilled to be having Jeff join us here today. You might be wondering, why are we having a guy talking about Bitcoin on a real estate podcast? Well, I think it's critically important that people that are listening to this look at all their options across investments and consider ways in which they might diversify differently. And Bitcoin seems to be a wonderful way to do that. Jeff has a lot of really great insight on that, so I want to talk about that more with him today. But also, he's a small business owner and somebody that took a risk and decided to get going with starting a business right here in Central Maine, which is something at Pouliot Real Estate that we're really passionate about. And Jeff, I'm just really thankful that you made some time to be here today.
Yeah, it's a pleasure. I appreciate the opportunity to kind of share my story, and always great to spend time.
Yeah, definitely. So for the listeners who don't know you, just a little bit about your background, where you grew up, and kind of what you did after high school and how it was that you became a financial advisor.
Yeah, absolutely. So I grew up in a small town called Green, Maine, so just about 30 minutes south of Augusta. Went to Levitt Area High School. Played soccer all my life, all the way through high school. And when I graduated high school, ended up going to Husson University up in Bangor, majoring in business. Primarily went at the time really to continue my soccer career, as I think some kids out of high school do. And business, was just a really broad, major that I could kind of sink into that had a lot of different opportunities on the way out. Graduated from Husson in 2009 and, made my way down to Portland with my girlfriend Amy at the time, who's now my wife. I graduated. I got a job at Enterprise Rent-A-Car right out of school. So they have a great management trainee program for anybody that's seen Step Brothers. They give you the tools to be your own boss, right? And looking back, I can't refute that claim. But it was a great opportunity for me at the time and a great learning experience, and worked really hard, worked my way up the ladder, and was able to kind of relocate throughout the state of Maine to take advantage of opportunities. And my wife Amy was a great supporter of that venture and saw the bigger vision of what we were trying to do, and after a few years at Enterprise, and I kind of had realized that I had reached the goals that I had set for myself, and I kind of had a moment where I said, is this really what I want to do for the rest of my life? Sure, there's some opportunity here, but I'm really kind of building somebody else's dream, and is that what I was put on this earth to do? And, I really kind of had a thought that I wanted to have a very profound impact with my life's work. And that caused me to kind of question what I was doing and look at opportunities. And I actually made the decision to quit cold turkey, and made a phone call and set up a meeting with a marketing agency locally here in Central Maine, introduced myself, and the rest is kind of history. Got my licenses, was able to latch on with a mentor, and failed forward for years until I was able to really kind of learn the business, and now here we are today. So it's been a great journey, and I think when you look back, as often in life, everything kind of makes sense in hindsight as you look at progressing what you've gone through and how it all prepares you for where you are and kind of where you're going.
Yeah, well, it's interesting because I remember first seeing you hang your shingle here in town, and I was thinking, man, what is Jeff doing? Because you have a very unique approach to, an effective, I should say, approach to helping people with managing money. Different than what someone might experience with, say, like an Edward Jones or something like that. Where you're really looking at the holistic picture of the client and trying to pick out some ways that might work for them. But I also saw what appeared to be like a real focus on cryptocurrency, but not all of them, specifically, around Bitcoin, which seems to have become a core component of what you're working on in your day to day. But I'm just kind of curious, like you were working at a firm helping people with like annuities, insurance products, things like that, and you decided, hey, this isn't for me anymore. I want to go out on my own. Why did that happen?
Yeah, so when I left my previous career in 2016, the first thing I did was I got my life and health insurance license for the state of Maine, which allows you to position life insurance products, annuities, long-term care. And then a few months later, because of the DOL, Department of Labor ruling that was coming down in 2016 with the fiduciary responsibility, we were kind of forced into getting our Series 65 license, which is the investment advisor license.
Okay.
So within 6 months of getting into the industry, I had both licenses, which I think is really important because that positions you to be able to offer different products to really meet the client's needs. If you're an insurance-only agent, then you're just going to sell insurance products, whether or not it's truly in the best interest of the client. And if you just manage money, well, not everybody wants to be in the market. So, there's some opportunity on the insurance side to give safety. So, really kind of getting both of those licensed at the start, was foundational. But I had worked with a previous company that was very successful in the state of Maine. They were phenomenal at marketing and getting, phone calls and people through the door. And, I learned a lot throughout that process. And there came a point in time where actually the owner of the business, after about 12 or 13 years, decided he was looking for a new opportunity and he had plans to sell the practice. So, that was at the end of 2022. So having been in the business for about 6 years, I kind of said, well, here's a fork in the road opportunity for me. I can either stay with the purchaser of this business and the new owner of this business and have all my leads paid for and, getting, phone calls on weekends to set up appointments and going out and closing business. Or I can, take maybe the road less traveled and, use this as a jumping off point to start my own practice. And, after a lot of thought and, support, again, from my wife and my family, that was the decision that we decided to go. And, I lost some clients during that transition that felt more comfortable staying with the more established outfit, the bigger firm. But a majority of my clients did come with me. And, that was at the beginning of 2023. And it's been, a really great ride for us over the last 2.5 years.
So your business is called Sovereign Wealth Management. Can you tell the people who are listening, at a higher level, what services that you offer for people and what kind of like your vision was when starting that company? And even how like the name Sovereign speaks to that.
Yeah, absolutely. So, we really look at all aspects of financial planning. So we generally work with people that have accumulated assets. I'm a big believer that if you're young and getting started out, there's not a whole lot of value in working with a financial advisor because generally you're going to pay fees, you're going to pay commissions, and you're probably going to underperform the market. Like 95% of financial advisors are going to underperform the S&P 500. So when I get, contact
Wait a second. I just want to pause on that for a minute.
Yeah.
So what you're saying is a lot of time people go and sign up with a financial advisor, they would have been better off just buying the S&P 500 on their own?
Generally, yeah. I mean, if you just go out and you open up a Roth IRA or, invest through your 401k and you just buy an S&P 500 index fund and you pay, 0.05% a year for fees, you're going to do phenomenally better, likely over the long term, than working with a traditional advisor at your bigger brokerage houses that are just putting you in mutual funds and either getting a commission up front to do it and then charging fees along the way, or they're charging 1 to 1.5% per year to manage your money, and again, likely underperform the S&P 500.
It's pretty comforting to listen to a person whose, income is derived by having people work with you to say, hey, like, we might not be the best fit for you when you're starting off.
Well, again, like for me, it's about doing the right thing. And I'm happy to have conversations with anybody, but if I could look at myself at 20 years old and some of the decisions that I made at the time, and there's value in getting insight, but when it comes to investing, generally you're going to be better off just not paying the fees. Because if you're paying a 1% fee a year for 30 years while you're saving for retirement, I mean, that adds up in compounds. And if you're not paying that fee and instead you're just participating in whatever the market does, which is 15% a year for the last 20 years, 15 years, then you're likely going to be far ahead at the end of the game. I think working with a financial advisor really comes into play when you've got more going on than just accumulating assets. I think when you're looking at distribution, retirement transition, Social Security, estate planning, when you're focused more on risk management, because that's the other thing with younger individuals is it's like, you have time in front of you, so just take on risk. Don't worry about risk management. Buy the S&P 500, buy the Qs. Buy assets that are more volatile that will appreciate further over the long term. And who cares what the market does? Whereas with me and my client base, we're more focused on, hey, we want to get upside opportunity and participate in the market, but we also want to have that hands-on tactical management where we have the ability to move things around if need be. Yeah. And I think that there's a lot of value in that for clients, especially if they've worked, 30 years at a career, built up $1 million 401k, but don't know anything about the market. Yeah. Having that partner and that resource to guide them through that transition, especially in a fiduciary capacity, is a really big deal.
Yeah, I kind of cut you off with the holding the point, which was, how was it that you came up with the name, or why is it Sovereign Wealth Management?
Yeah, so this leads to my Bitcoin story, and it's a little bit of a drawn out, if we're ready for that transition.
Yeah, perfect.
But COVID really changed everything for me in a lot of different ways, and we've talked a little bit about that. But as it pertains to markets, it was my first time managing money during like a significant, black swan type of market event, a significant market shock.
What do you mean by a black swan?
Just something that was relatively unpredicted and, kind of caused significant trauma and chaos in the markets, not just the equity markets, but the bond markets. Something where you have that's a once in a lifetime type event where the market drops 35% in 5 weeks. I mean, that's a significant amount of volatility for the traditional markets. And they basically shut people in their homes. I mean, you can't leave, 15 days to slow the spread. You can't go to restaurants. You can't go out to eat. You can't travel. You can only consume via Amazon. Yet, I think it was 8 days after we received the 15 days to slow the spread postcards in the mail, the stock market had bottomed and had started its run towards all-time highs. So I'm sitting there watching the market move higher on the back half of that 15 days to slow the spread, and I'm saying, we can't even leave our homes. How is the stock market going higher right now, right? And we had positioned for a challenging market, so we were begrudgingly watching the market move higher as we had gotten out and protected our clients, right? And so it just didn't make sense to me that like the world is basically shut down. We have 10% unemployment. You can't open your small business, yet the stock market is, going to hit new all-time highs in 2 months. Like, how is that possible, right? I wasn't really paying attention to markets in 2008, during the financial crisis. I was a college student. And that really kind of like piqued my brain and started me down the rabbit hole of like, how did we get here? Like, how is this happening? And I came to the conclusion relatively quickly within, the first 6 months that, well, the market's moving higher because they printed $4 trillion out of thin air. Right?
Fiat currency.
That's what it was, right? Yeah. So naturally, when the Federal Reserve says we're not even thinking about raising interest rates, right, and they print $4 trillion out of thin air, you know that you can't hold money in a money market fund or a savings account, right? Because you're earning nothing on that money in the money market and savings. And worse than that, you're also losing your purchasing power on that money because they're debasing the currency and increasing the currency units in the system. Right. So if you had $1 million in a savings account and then they print 40% of all the money that's ever been in circulation in the 6 to 18 months that followed COVID, that $1 million has $800,000 worth of purchasing power basically overnight.
So cash goes from king to jester.
Sure. Yeah. And I think cash has a place to be, king if you're a trader or if you're short term, right? Yeah. But long term, cash is guaranteed to lose value. A lot of people talk to me about risk, and it's like, well, in my opinion, the riskiest thing in the world is holding cash because you know that it's going to lose money, lose purchasing power, right? So I really went down the rabbit hole once I figured that out. Like, well, we don't really have free markets. Like, how can they just print money like this, right, at whenever they want? So I started going down the rabbit hole of like, how do you define money? Like, how did we get to this point? What happened in 2008? What happened during the dot-com bubble? Long-term capital management's blow up. All the way back to 1971 when we went off the gold standard. And on my search of wisdom in terms of learning about money, I stumbled across Bitcoin. And it was the second time that I had stumbled across Bitcoin. I first discovered it in 2017, but I wasn't ready to see it at that point. And I was in a state of despair. I mean, I was like, we are working for money. We're trading our finite time and energy for a currency unit that governments can print out of thin air. Right? What's the world going to look like for my daughter in 20 years? How much is a house going to cost? Right? What opportunity is she going to have on the American dream? And so, in studying Bitcoin, that's where I really learned the term of sovereignty and the importance of sovereignty and basically being immune financially from the decisions of other individuals. Basically being untouchable in a sense, right? And to me, that's what Bitcoin stands for. I mean, it's an asset class where you can store your wealth. Nobody can take it from you. Nobody can debase you, of that wealth. And so, when I transitioned out and we were thinking of a name for the firm, Sovereign Wealth Management was just the perfect fit.
Yeah. That makes a ton of sense. And for those people that are listening that aren't familiar with some of the things that you said, like for instance, the United States moved off the gold standard. And so we look at, and also too, and we haven't talked about this yet, but the introduction of consumer credit is kind of a novel thing in the United States as well. The ability for people to use credit cards to buy things that they don't actually have the cash for to buy. So when we look at the mortgage market as an example, in the 1930s, the New Deal with Franklin Roosevelt did a whole bunch of different things, but because it was coming out of the Depression, one of the things that they created as a new product was the 30-year fixed mortgage. This wasn't a thing before. And some people will argue that this has caused prices, to go up because people's purchasing power was increased that they wouldn't have been able to get before. But now we're in an environment where that's pretty much the norm. Most people get a mortgage because otherwise they would never be able to afford the prices that are out there today. But in tandem with that, we have an environment in which the money that we all spend every day, that we attribute a lot of value to, really, in a lot of ways, is backed by nothing other than the good faith of the American government, right?
Or the threat of violence.
With the threat of violence, yeah. And that's why you see in times that are maybe like we're in right now, a lot of posturing around what would happen with war, and we have a strong military and all this kind of stuff to basically maintain the value of our currency. Right? Am I wrong about that?
Yeah, I think it's pretty accurate, but I think the United States has also really put itself in a tough position, having outsourced, basically our entire country. I mean, we've outsourced all of our manufacturing, and we learned during COVID how reliant we are on third parties, whether it's for medications or it's for masks or it's for ventilators at the time. I mean, military equipment today, we're learning, especially today, rare earths and minerals, right? The United States' primary export is the U.S. dollar. That's the only thing that we really export here out of our country is the U.S. dollar. We import everything else. And it's interesting you bring up the 1930s with Roosevelt because that was Executive Order 6102, where they confiscated the gold after the Great Depression of all the individuals. They made it illegal to hold or hoard gold in the 1930s.
Really? I didn't know that.
Yep.
Wow.
And then you fast forward to 1971. So the dollar used to be backed by gold. So it used to operate in a capacity where, gold was the primary medium of exchange, right, for a long time. But as the economy scaled, it became cumbersome and inefficient for us to transact in gold, right? Especially as we grew, not only here in the country, but overseas and so on. Gold is just an inefficient medium of exchange. So at the time, they said, well, let the central banks hold your gold and we'll issue notes on top of the gold, right? There's a great book by Nick Bhatia called Layered Money that explains this really well, and how gold was the base layer and then the dollar was the layer on top of that base layer. And it used to be that, you could redeem your dollars for gold at a central bank. It said right on the dollar, redeemable for gold. And then in 1971, Nixon took us off the gold standard, and to fund the Vietnam War, his only other option would have been to raise taxes to 95%. Nobody would have voted for that. So he suspended the convertibility of the dollar to gold. And ever since 1971, we've been in an environment where the dollar is literally backed by nothing. And you look at what's happened to the national debt, and even worse than that. I mean, you look at what's happened to obesity, infertility, chronic disease. You look at suicides, depression. You look at every statistic that impacts humanity pre-1971 and post-1971, and the charts are just absolutely vertical. Because when the money is broken, then everything else that's built on top of it is broken. The incentive structures are completely destroyed. And unfortunately, we're seeing that play out in real time today when you look at the quality of life for, the people that were a part of the bottom portion of the K-shaped recovery coming out of COVID, right? For everybody that didn't own a house or own a stock portfolio post-2020, they're really struggling as our national debt grows out of control. Whereas those that have assets feel like everything is going great because in dollar terms, they're getting wealthier. Their homes are getting more valuable, right? Their stock portfolios are going up. So, it's really important, in my opinion, that we fix the money and find a way to fix the money so we can, really set our future generations up better, than the existing environment we find ourselves in now.
So in your mind, what's the way to fix the money?
Yeah, that's a great question because I don't know that Bitcoin at this point in time is ready for that responsibility. So I think some form of check and balance, whether you go back to some form of quasi gold backed standard and temporarily until you're able to transition to the Bitcoin network. My core belief is that in time, and it's probably going to take a lot longer than I expect, we'll be transacting in Bitcoin, and we'll be working with a deflationary currency that is fixed in supply and ruled by mathematics and code and not politicians and unelected officials. So I don't know what that transition looks like. But what I do believe is that the environment that we find ourselves in today is completely unsustainable. Our national debt at the end of 2019 was $22 trillion. Just this week, our national debt hit $38 trillion. So that's, greater than a 50% increase in the entire country's history of national debt in 5 years.
Wow.
We're running a $2 trillion deficit as a country with the stock market at all-time high, which means capital gains revenue for the country is at all-time high, and unemployment near historic lows, which means federal income tax revenues are near all-time highs. Yet we still can't make a profit as a country, which worries me about a potential future recession or a slowdown and the impact that's going to have on the debt, the deficit, and in turn, the purchasing power of our dollars.
It feels like our generation, because we're the same age, is the first generation that's grappling with what to do about the entitlement programs that were created largely to benefit the baby boomers. That now they've paid into their whole life and they want what's due to them. You know what I mean? Like Social Security, which is like the biggest Ponzi scheme in the entire history of the world, really, because it's insolvent, But if you don't keep getting more people onto the path to pay into it, then it's definitely not sustainable. You know what I mean? It's basically like Bernie Madoff legalized.
100%. 100%. Like a lot of people look at me like, Bitcoin's a Ponzi scheme. It's like, if you only knew.
Well, this is what I want to unpack with you a little bit more because I felt that way for a long time too. Like, what is this? I've put money in a wallet, then the thing went up and I made a bunch of money, but then I turned it back into $1, which isn't really backed by anything, and somehow that has more value than the Bitcoin to the majority of people that are walking around on the street. And recently I went and met with you in your office and you kind of laid out your thesis and my head exploded because I was like, to me, this is like the new gold, except for it's actually completely finite in its amount. Like gold, we could find new gold someday, maybe somewhere, probably not likely, but there could be a depository that's huge that someone hasn't found yet. Whereas with Bitcoin, it's a limited amount that's ever going to be made, right? Yeah.
So the beauty of Bitcoin is that for the first time in the history of humanity, we have an asset that is absolutely finite and scarce in supply. It's the first asset, excuse me, in the history of the world where regardless of what the demand is for the asset, you cannot change the supply, right? So if there is tremendous demand for real estate, you can build more homes. right? If there's tremendous demand for government debt, a government can issue more debt. If there's tremendous demand for gold, as there's been lately with gold, shooting north of $4,000 an ounce, you can dig more gold out of the ground to saturate that demand, right? Right? To make kind of a market equilibrium. With Bitcoin, it's the only thing that does not have the opportunity to increase in supply based on the fixed halving schedule. So I look at it and say, what would you consider the most valuable asset that we have on this earth as individuals?
I mean, I guess I would say human potential.
Yeah, I think that's definitely up there. What I would say, what some people might say is time, right?
Yeah.
Our time.
Yeah.
Right? Our time is the most valuable thing that we have on earth.
And we
right?
all have the same, well, we don't know how long we're going to be here, but we all have 168 hours in a week.
Well, and I would say, the reason the way I derive that is by saying the reason that time is valuable is because it's finite.
Mm-hmm. Yeah.
Right? Our time is insanely valuable because it is finite. We know that we are going to die at some point undetermined in the future, right? And it's that same reason, I believe, that makes Bitcoin incredibly valuable is because it is finite. So when you think about the system and the way it works, and I can go on about, the baby boomer generation and the entitlements and the fact that they own all the assets and are now pulling from Social Security and the millennials are the ones paying for it. But when you think about it, we have a finite amount of time on this planet, right? And we trade that time 40 hours a week in exchange for a currency unit, right? So we are trading our time and energy in exchange for this dollar, right?
Yeah.
Yet some unelected official or some government entity can print those dollars without putting in any work whatsoever, right? Which basically, in my view, is the act of robbing us of our time and energy.
Yeah.
We are being robbed of our time and energy when we're working for these dollars and putting in proof of work that some third-party entity can print out of thin air, right? So it's like having a boat with a leak in it, right? Every single asset class in the world has a leak in it, right? Some leaks are bigger than others. If it's the US dollar, that boat has a massive leak, right? If it's gold, that boat has a 2% leak, right? The gold supply increases at a rate of about 2% a year. With Bitcoin, there is no leak, right? So no asset offers you the opportunity to protect your time and energy like Bitcoin, because Bitcoin, like time, is absolutely finite and scarce, right?
So for those who have never had the pleasure of sitting with you to see this mapped out on a board, which I have, can you speak about that? Because that was really the aha moment for me, this halving schedule of Bitcoin. And like you see today, Bitcoin's like 112 or something. It was like 125. I've heard you say, hey, look, it could go as low as like 50 and I'm not going to be worried even though I own Bitcoin because I'm on a long time horizon for this. Can you explain like what you've seen historically happen with Bitcoin prices and what's likely, no one's obviously holding you to this.
Sure.
This isn't financial advice for anyone listening, but what you predict and what your thesis is with regard to the price of Bitcoin and why that is.
Yeah. Yeah. So I guess I'll start by talking real quick about the halving,
Okay.
the halving schedule. So a lot of people say, well, how is Bitcoin finite at 21 million? So Bitcoin was launched in 2009, January 3rd of 2009.
It's my dad's birthday.
Oh, well, there you go.
I should have bought him a Bitcoin for his birthday.
At least buy him a book.
At
At least buy him a book. And it's funny because I believe that the U.S. economy really died in 2008. And died in 2008 as a result of the great financial crisis and bailing out the banks, bailing out the insurance companies at the expense of the U.S. citizens. So as one system was dying, right, and we've basically been on life support for the last 15 years, funded by 0% interest rates and quantitative easing, right? But Bitcoin was born in January of 2009, right? So Bitcoin, every 4 years on average, has what's called a halving. So a certain amount of Bitcoin is released to the market via the Bitcoin miners, which are basically just very powerful computers. Every 10 minutes, a certain amount of Bitcoin is released to the Bitcoin miners. And those miners can hold it or they can sell it. They can do whatever they want.
And these miners are basically using a lot of electricity, a lot of energy to do ones and zeros on transistors, which represent some kind of a transaction which is like codified and then locked in, right? So then that becomes part of the Bitcoin
Yeah, so basically every 10 minutes there's a block of transactions on the Bitcoin blockchain. And all around the world there are millions upon millions of computers that are working 24/7 trying to be the one computer that solves the problem that allows you to validate that block of transactions.
Okay.
Every 10 minutes. Bitcoin is the most powerful computing network in the world by magnitudes, by the way. So every 10 minutes, a certain amount of Bitcoin are released via these miners. And so from 2009 until 2012, which was the first halving epoch, every 10 minutes, 50 Bitcoin were released to the market. Every 10 minutes, right? Now, of course, at that time, Bitcoin was 50 cents. It was $1, it was $2, it was $10, right? And then in 2012, the first halving took place, which means the block reward that is credited to the miners is cut in half. So instead of 50 Bitcoin being released to the market every 10 minutes, in 2012 to 2016, it was 25 Bitcoin every 10 minutes. And then from 2016 to 2020, it was 12.5 Bitcoin every 10 minutes. From 2020 to April of 2024, 6.25 Bitcoin every 10 minutes. Today, where we sit until 2028, every 10 minutes, 3.125 Bitcoin are being released. Now, today, one Bitcoin costs $115,000. So if you mine a block, which is 3.125 Bitcoin, you're going to get, in the vicinity of $350,000 as a reward.
Okay, so that's how they get paid, like the company that invests all the money to buy all the energy, build all the computer system, and have this data warehouse that you might drive by and just be like, that's a warehouse. It's mining these transactions, and when they're done and get it proofed, somebody sends them whatever the value is times 3.125%.
Exactly. So it's built into the Bitcoin protocol where those Bitcoins are deposited into the address that's on file with that specific miner, right?
Okay.
So it happens instantaneously. There's no third party that credits the account. It's built into the protocol, right? And that goes on and on and on until we reach 21 million, right? And right now, today, as of recording, 95% of all the Bitcoin that will ever be in existence are circulating in supply today. So
Really?
This thing was launched in 2009, and here we are 16 later, and 95% of the 21 million are already out in existence today.
Okay.
Because of that halving schedule, the remaining 5% of all Bitcoin to be mined, it will take 115 years for us to mine the remaining 5% of all Bitcoin because the amount that's released halves every 4 years. It's going to take 40 years to mine the last one Bitcoin from the year 2100 to the year 2140,
Wow.
right? So, when you look at it that way, it's the most basic aspect of economics. It's supply and demand, right?
Yeah.
If demand grows while supply stays the same or decreases, well, then naturally price has to go higher. And we've seen that happen, on display for the last 16 years.
Plus, I would imagine the incentive for the miners to continue mining is going to have to go up drastically because of the cost of electricity, right?
Correct.
Like I just left a conference on Monday in Boston with this group called Liquid AI that basically their whole business is to put AI on devices not tethered to the cloud. So that could help in some respect with the reduction of the need for electricity pulling from this going back and forth to the cloud, getting the information to run the AI. But even still, there's so much being put into the development of data centers for the utilization of AI, which we're just seeing the beginning of right now. 10 years from now, the amount of data that's going to be required and the energy needed to run that. I mean, at some point, we're going to have to develop new nuclear facilities or else we're not going to be able to use all this stuff that we want to use. But conversely, that means that the cost of mining might be X right now because of electricity infrastructure or whatever. But as time goes on over these next 100 years, that's going to get exponentially higher. And so whoever makes that last Bitcoin, I mean, it might cost them $1 billion to make that Bitcoin.
So my theory is by then, we will be on a Bitcoin standard. There will be no fiat currency. I mean, you talk about the newness of this credit system being 1930s. I mean, the fiat system as we know it, the US dollar system, has only been around for 55 years since 1971, right? So people say, well, Bitcoin, it's only 16 years old. It doesn't have a track record. It's new. It's like, well, the dollar is only 55 years old in its current form, right?
It's interesting, and I think it's worth staying on that for a moment because myself included was very skeptical about buying cryptocurrency because it's like I can't hold it in my hand. And it's like, okay, well, what am I holding in my hand? I'm holding a dollar. And collectively, all the other human beings as part of the society have said that have value. But we have there's no data to show that it has value backed by anything other than what people say and do.
Sure. But I think that's everything too, right? People talk about like Bitcoin has no intrinsic value. It's like, the most valuable thing we have on earth is air. Right?
Yeah.
But that doesn't cost us anything.
Right.
Right. So like, how do you define value? I think value is subjective and different to everybody.
Sure.
Right. So the way I look at it is technology dematerializes the physical object. Right. So if we look back, you had, vinyl records to 8-track tapes to cassettes to CDs, and now for $9 a month, you have every single song in the world on your iPhone, right? We used to have massive gazettes that we would, drive around the state of Maine looking for route numbers, right? And now you have, Google on your phone. You have, massive libraries, right, that have just, encyclopedias upon encyclopedias, and now you have AI, right?
Yeah.
You have physical relationships to social relationships. Like technology gets rid of the physical object. And that's what Bitcoin is, in my opinion, is it's the dematerialization of a decentralized premier store of value asset. Similar to gold, but it's not physical. Now, that's a feature to Bitcoin and not a bug, particularly as we progress through the 21st century digital economy. Gold is not transferable, it's not portable, it's not divisible, it's very hard to verify, very hard to audit, right? Talk about Fort Knox. Gold can be confiscated, right? It's very hard to carry, $10,000 worth of gold through the Portland Jetport or across the border from Canada into the United States, right? You can't send gold across the internet, right? If I want to send somebody gold, I have to trust a third party. Why did gold fail in 1971? Because we trusted that the banks wouldn't print more dollars than they had gold in reserves, right? Gold requires trust of a third party to either secure, transact, or store. Gold requires a third party to do that, right? Because Bitcoin is digital, it does not require a third party. If you have a cell phone and an internet connection, you can live anywhere in the world, and I can send you $5, $10, $1 million, and it costs pennies on the dollar to do it. There's no third party that approves the transaction and says you can or can't send it, and it settles instantaneously. Right?
Some would argue the third party, though, is the computer, like that's run by energy that the government could shut off or turn on.
Yeah, but I think you can make that argument. But then if you look at, people say, well, like, what happens if an EMP happens, or what? I mean, look at Amazon.
Well, I think
Amazon,
of like the Amazon AWS shutdown last week.
Exactly. And the second biggest cryptocurrency network, Ethereum, shut down with it because it's built on top of the Amazon Web Service. Whereas Bitcoin didn't miss a blink. TikTok next block.
This is why the guy, so this CEO is probably like 30 years old, Liquid AI, on Monday, they were asking him, like, what are your biggest challenges? And he's like, honestly, it's like Google and Microsoft, because they want everybody on the cloud, like that, and Amazon. They want everybody using these cloud computing services, so they go build $1 billion data center, and then they have all the compute in that center, and they've locked up all the energy to pay for that compute. And then they tether you to that like a slave, basically. Like, and unless you are part of that, then you're shut off. And what happens is people build their businesses on that data cloud,
Correct.
or they build their business on a large language model for AI, that if that underlying third party, something happens like you did last week, you're done.
It's totally centralized.
And I suppose that for me is like, all right, well, let's say I just decide to refute what Jeff says, and I'm just going to go buy a bunch of gold and stick it in the safe in my basement, because I at least know that I can open it up and touch it.
Sure.
But like, well, if I can't transact it or do something with it, then what does it matter that I can touch it?
And then where do you sell it? I mean, do you bring it to a pawn shop and they're going to charge you a 15% premium, or a 15%, they're going to pay you 15% less than spot value to get it, right?
Yeah.
And it's like, I think gold is a pessimistic bet on the future, in my opinion. Gold is a pessimism bet, right? People are hoarding gold because if the world ends, they have their gold bars. And I always tell clients, it's like, well, if you think the world's going to end, like
maybe you should go on a vacation.
Well, sure, that. But what's far more valuable than gold is non-perishable food, and oddly enough, most of the gold bugs say, well, I have that too. But I think Bitcoin is a bet on optimism. It's a bet on a future of hope and transparency and trust. Whereas gold is really a bet on pessimism of the future and lack of American intuition and human advancement. And I think that's why, you're seeing part of the move in gold as of late. But I also think, gold is the original Bitcoin. I mean, it's the decentralized neutral reserve asset that individuals, companies, and nation states are looking at as an alternative to things like bonds and treasuries and assets that have counterparty risk that gold and Bitcoin don't.
And now, as a real estate guy, I've joked with you that you've bought some of God's Bitcoin, which is land. But you've made a great point on that as well, which I hadn't really thought too much about, which is the fact that everybody that owns land in the United States is still kind of like a renter in a lot of ways, because you always have the obligation to mitigate your risk with some kind of insurance, which has an ongoing policy premium cost each year, unless you just throw caution to the wind and have no insurance. People could do that. If you have a property on that land, you're never going to do it if you have a loan, because the bank's going to require insurance. So you've got that ongoing. And let's say you have a mortgage on it, you pay it off, you still have that fee. Then property taxes, which to your point earlier are totally out of our control, or mostly out of our control, because each year the costs go up, inflationary environment. So then the government, locally says, hey, the property taxes are going up to pay your portion of that, right? So even if the land's paid for, like with Bitcoin, if you buy one Bitcoin, you don't have any fees other than if you're in some wallet or something that charges a fee. I don't know, but there's very minimal or no fees for Bitcoin. Whereas with land, you have ongoing costs associated with it, which, if you look at the math of it, deteriorates your overall return.
Yeah, absolutely. And not only do property taxes go up but also because the dollar depreciates, the nominal value of the house goes up. So property taxes are increasing in percent in terms of the percent that they charge, but they're also increasing on an appreciating house value, right? Which puts stress on the income and the cash flow if your wages are not keeping up with that rate of inflation, right? Yeah. But so you had a great segue at the intro of this conversation about, talking about, why are we bringing in a cryptocurrency or a financial advisor to, on a housing podcast? And I think to tie it back around, Bitcoin is property, right? Bitcoin is just digital property. Right? I think real estate is obviously physical property. Bitcoin is just digital property. But Bitcoin doesn't have the carrying costs that you alluded to that land does. It's you don't have property taxes. You don't have insurance costs. Your land is generally only desirable by somebody that wants to live in your locale, right? You're generally not going to have somebody that lives in Africa or Asia or Latin America be interested in your land in Augusta, Maine, right? But my Bitcoin as property, digital property, is desirable to all 8 billion people across the globe that are looking to store their wealth in an asset that no government can create more of and no government can take from them. Yeah. But also, land is not really divisible, at least not easily, right? Land is absolutely not portable. Right? Land is, very hard to transfer, at least, in the traditional sense. Yeah. So I think, land is valuable. And I think as the dollar depreciates, all valuable assets will continue to rise. But I think when you look at the opportunity that's in front of us here, I think that, Bitcoin has the greatest amount of opportunity for appreciation based on its characteristics as digital property, not confiscatable, divisible, transferable, portable, no carrying costs, no commissions on transactions. It's really pure economic energy in its most distilled form is really kind of how I look at it. And not only that, but it's built for where we're going, right? Whereas most of these 19th century analog assets are products of where we've been. And, look how commoditized the housing market has become, right? I make the argument often that, and I may be wrong, and certainly this isn't my area of expertise, but it's not so much, I'm sure that the lack of supply creates some of the problems in housing, but I think the biggest problem in housing is the speculation and the fact that people are, using real estate as a store of value and an income generator, as opposed to using real estate and housing for its utility, which is to raise a family, to make memories.
You're 100% right. I mean, 25% of the homes in 2025 so far have been bought by real estate investment companies or bigger companies. And it furthers this separation of have-nots. When you have somebody like my sister who just bought her first home on Friday, trying to compete against a real estate investment trust with billions of dollars. I mean, in this case, that didn't happen to her. But just looking nationally, that is a trend that's occurring where people are looking at it as a store of value. And they're looking at the way that you look at Bitcoin from a longer term perspective. I don't need this economic economics to make sense today, but I know over the next 20 years it's going to make perfect sense. So I'm getting in on this. Whereas somebody else, it's like, I just need to find a mortgage payment that I can afford to pay based on what I've traded my 40 hours a week for.
Exactly. And I think, housing is set up to give you a lot of good benefits. I mean, you can use it as collateral. You can take loans against it to acquire other houses. Obviously you can charge rent to offset the ongoing costs and you get the appreciating asset. But then that puts people in a perpetual situation of non-ownership and renting and being at the mercy of somebody else. You are the antithesis of being sovereign, right? You are compliant or controlled in that sense, right? You don't have the autonomy and ability to make your own decisions. You're at the mercy of the decisions of other people, right? And, so... And again, I think that's a product of broken money, because if money doesn't hold value, like the whole reason we invest, it's to save for the future. But really, when you think about it, the whole reason that we invest is to sell our dollars, right? It's to turn around and get rid of our dollars as fast as we can and then store that economic energy in assets that are likely to appreciate in value over time, to at which point we can sell them for more dollars than we started with to be able to consume. That's the whole point. And then, so at that point, you derive it down to risk. Well, what's the assumed level of risk for me selling my dollars for this specific asset, right? Is it a stock that has execution risk or CEO risk or tariff risk? Is it real estate that has weather risk or property tax risk or tenant risk, right? Is it bonds that have credit risk and default risk and debasement risk, right? Or is it gold that has confiscation risk and inflation risk, right? And when I look at all these things, and I say, well, Bitcoin doesn't have any of these characteristics. What drives people away from Bitcoin, aside from a lack of understanding and terrible media coverage over the last 16 years, unethical, worse than just ignorant media coverage, is the fact that it's volatile. Right? The thing that scares everybody away is, Bitcoin is volatile, and people incorrectly assume that volatility and risk are the same things. Right? And the easiest way I can illustrate that is Bitcoin doesn't have any of those risk characteristics that all these other traditional assets have that I just explained, but it has tremendous volatility, right? Which makes it a long-term asset. You're not storing, overnight, 2-month, 3-month money in this asset. This is long-term money. The dollar, on the other hand, is not volatile at all. But it is insanely risky to hold dollars for 20 years, right? Because you are guaranteed to lose money, right? So really...
Why is that? Because of inflation?
Because of inflation. I mean, they think about it, Matt. The Federal Reserve targets 2% inflation. So what that tells me...
They tell you right up front you're going to lose 2% a year guaranteed.
Inflation is involuntary wage debasement.
So if I had cash, $100,000 in my bank account, and I'm just like... I'm a ride or die on my $100K in my bank account instead of I'm a ride or die on $100,000 worth of Bitcoin. Okay, 10 years from now, 2% a year, that's gone down 20%, well, more than that when you compound it in value, right?
Yeah, well, I also think you have to question how you measure inflation. So I mean, you could say it's 2% inflation according to the CPI metrics, which they plug in, Cheetos and Netflix and things that people, sodas, right? Things that really people don't care about. I mean, I can guarantee you the price of a ribeye is not built into the CPI metric, right? The price of real estate is not built into the CPI metric, right? I believe that true inflation is the rate at which the money supply increases year over year, the M2 money supply. And dating back to 2009, the M2 money supply has increased at 15% a year, every year.
Wow.
And when you overlay the chart of the M2 money supply in the United States against the chart of the S&P 500 since 2009, they're a mirror.
Really?
So the S&P 500 is the rate of inflation. That is the true cost of capital. So everybody thinks they're doing great, making 4%. You're losing, after taxes and inflation, you're still losing 6% of your purchasing power on that money.
Yeah.
Particularly for things that people really want to buy, like food and housing and vehicles and things that actually, derive value, not things that can be subbed in and out to come up with this government statistic that applies to every person. I mean, inflation is always on a relative basis, right?
Yeah.
For a 30-year-old, inflation is far more devastating today than it is for a 65-year-old, right? In their day-to-day costs. So,
and all the 65-year-olds are making the rules.
Yeah, I mean, think about this, right? Like, all and this is arguably no fault of their own. Like the baby boomers are part of this system, and they just happen to be alive during whatever happened. But the baby boomers own everything.
Yeah.
They own all the houses. They own all the stock portfolios. They own all the assets, right? They don't have debt. right? They are no longer contributing to Social Security, but they are now pulling out of Social Security, right? They're the ones that told their kids and grandkids to go to college and to get a degree and to, live the American dream. Well, these kids have done that. They've gone to college. Well, this year, the unemployment rate for college graduates for the first time ever is higher than the unemployment rate for non-college graduates, right? So not only is that not working out, but you're $60,000 to $100,000 in debt as a college graduate, but you're paying in your FICA taxes Social Security to the individuals that own all the assets that you want to own, and they're pulling on Social Security, right? So you talk about the Ponzi scheme nature of this. What they're doing is they're pulling forward economic energy and robbing future generations to benefit the existing generations. Yeah. And that's not, a baby boomer walking down the street who made that decision, but they're the group, the age group of individuals that have benefited the most from 40 years of decreasing interest rates and 40 years of exponential growth in our debt and money supply.
Yeah. It's really interesting because the volatility, yes, people see it. It's like every morning when I open up this thing that I have on my email called Morning Brew, it gives some highlights at the beginning about the market. And always on there is Bitcoin pricing, so I can see it in real time. But in looking at the charts, which you've laid out for me, this volatility is a function of like when they're making and mining and doing the halvings on the Bitcoins. There seems to be like somewhat of a drop, and then it comes back. But when you look all the way back, I mean, Bitcoin, when it first was created, I guess would be 0 or 0.1 cents or whatever the value was. And it's had this tremendous uptick in value since then. And some people would be like, well, maybe this is the top. But really, the fact that it is finite, at only 21 million will ever be made, we can tell people that just with the same certainty that you will only have 168 hours a week this week.
Correct.
And next week the same, unless you die. So no, you're not going to get more, you're not going to get less. We all get the same. Doesn't matter how wealthy you are, the condition you're in, whatever. It's the same with Bitcoin, right? Like some weeks people use those hours a lot better than they do in other weeks, right? But they all have the same amount of time. And people sometimes turn more to Bitcoin, maybe they turn away. But in time there's a realization like this is all we're ever going to have. And a lot of institutions now have put their money, they've traded their dollars like you were talking about before for Bitcoin, which bring in this other level of institutionalization to the category that gives some that may be on the edge with questions more certainty that, hey, if the big dogs like JP Morgan, which is a bank, are buying Bitcoin, which I'm sure they must own some, like then maybe it's safe for me to be in Bitcoin too, like a validator.
Yeah, I think we've gotten through the first life stage of Bitcoin, right? It was really the wild, wild west for a long time. I mean, the sweatshirt I'm wearing today is the Silk Road Anonymous Market, okay? So this is really the first use case of Bitcoin.
What does that mean?
So the Silk Road Anonymous Market was a black market that was used online, and the primary medium of exchange that was used for that market to buy drugs and different things was Bitcoin. So that's kind of how it initially got its footing, just like gunpowder was initially used for medicine for hundreds of years before they realized they could use it to utilize firearms, right?
Really?
So things have different meanings at different times. And the U.S. government shut down the Silk Road. They jailed the founder, Ross Ulbricht, 2 life sentences as a first-time nonviolent offender, 30 years old, for creating a website. And but they couldn't shut down Bitcoin in 2013. And gratefully, Donald Trump actually pardoned Ross Ulbricht after, I think, 12 or 13 years in prison, for time served.
That's crazy.
But the...
Is it because people were doing nefarious things on there and they blamed him for it?
Yeah, I think part of it was like, you're going to use our currency, and if you don't, this is what's going to happen to you. I think they were setting an example, really, for him at the time. But
because what power does a government have if you don't use its currency?
I mean, this is why, Bitcoin is a virus. It's like the internet. Like, you can fight it. It's like an automobile rolling into a horse and carriage city, right? It's like you can yell at it and you can say it's loud and dangerous and it's going to blow up. And same thing with electricity. There's nothing wrong with candles. Why would we have these wires hanging all over the place? People are going to kill themselves, right? New technology advances one death at a time. right? Is really kind of how that works. So yeah, when it pertains to Bitcoin's price performance, I mean, the key is Bitcoin is a long-term savings vehicle. Like, you are not putting in Bitcoin what you need tomorrow, next week, or next month. That's what you have dollars for, right? You keep cash for liquid short-term reserves. Anything else, if you're going to invest, you need a minimum 5-year time horizon. Dating back to 2009, anybody that's held Bitcoin for 4 years, nobody's ever lost money, right? And sure, Bitcoin has these massive moves ups and then these big moves down. But I think as the asset class grows and matures, you're going to see a reduction in that volatility. And as you mentioned, I mean, J.P. Morgan, just this past week, we got notification that J.P. Morgan by the end of the year is going to be rolling out Bitcoin-backed loans. So the opportunity to use J.P. Morgan to store your Bitcoin as collateral to get liquidity out of your Bitcoin without having to sell it, which is a big,
a big deal.
Advantage for real estate and physical.
This is the first product to do that?
They're not the first, but they're the first big bank. So there's a lot of Bitcoin native companies that are offering these types of products. But once the big boys, the big banks get involved, like, that's when you're going to see a major phase shift in the understanding and the view of this asset.
And they're not going anywhere. They just cut the ribbon on their new $3 billion facility in the middle of Manhattan.
Yeah. Yeah,
which I had lunch with the architect right after the ribbon cutting.
Oh, did you?
Yeah. I mean, so to me, I look at this and I'm like, hey, if these big institutions, what are, quote, too big to fail by the U.S. government, are getting behind this asset class and saying, hey, this is valid, and also we're willing to give you our dollars,
correct,
for your stake in Bitcoin, like to have it as collateral, then that's legitimizing that asset. The same as when banks said, with in the 1930s with a mortgage product, we're willing to lend to you on the value of that home because we know in time it's going to go up.
Correct.
Because we're in an environment that creates tax policy and government rules and everything that support the value of that going up. Because if it doesn't, then you don't have a stake in the game here. You're a gypsy, you're a person of the world, and you're not going to be beholden to what it is that we tell you to do, because why would you? I mean, you don't have any stake in it. And I think that we're seeing this played out in real time. When you look at the mayoral race in New York City that's going on right now, the fact that a person who is so far to the left as a socialist can be gaining so much traction says a lot about the sentiment of the people there, which is majority of people don't own anything.
Yep.
They don't even have a car. They take public transportation to get around and so forth. And so they're sitting there like, what stake do I have in this? You know what I mean? And Bitcoin is a way to offer that to people, no matter where they live.
Yeah, I think a lot of people are just feeling left out. And I think that's only going to get worse, unfortunately. A lot of people are feeling like, this isn't fair. I'm working exponentially harder for a dollar that's worth exponentially less. I can't afford to buy anything. I'm basically just working to survive and not to thrive, right? So that's how, unfortunately, you get these massive regime changes where socialism and communism come into play, where these big, great promises are offered, and, it creates systemic issues in the demographics of our country. So it's the thing that everybody hates, I think, is the thing that benefits them the most. And if everybody is a denier to Bitcoin, I think that's like the first step. Like, everybody, myself included, like, you are a denier to Bitcoin. And then eventually, in time, you transition to a skeptic. And once you transition to skeptic, then you will eventually end up as, a full-fledged believer in the asset. If more people would take the time to really learn about this and the benefits that this can have for them, maybe not tomorrow or next week or next month, but 5 years, 10 years, 15 years down the road, the opportunity to have hope that their future can be better than it is today. Because if you think about it, and we've talked about this, what have politicians done for us? I mean, every 4 years, this, that. I mean, we're $38 trillion in debt, right? I mean, the dollar menu in McDonald's 5 years ago, I think a McChicken costs like $5.50 right now. I mean, it's insane, right? Every decision that has been made, I mean, sure, there have been good ones, but for the most part, fundamentally, like, there's no politician that is coming to save you, right? Like, you need to save yourself. You need to be a critical thinker, which, was really brought to light, I think, over the last 5 years. You have to be an independent thinker, a critical thinker, and a self-starter, and not reliant on other people and their opinions, of which they may not know anything.
Right. Yeah, I mean, you've been featured in major outlets like Fortune magazine and Bloomberg Business Week, and a lot of your messaging does center around that education piece and empowerment. And so how do you help people feel more empowered about those decisions and what to do with their money?
Yeah, I think education is the key. So one of the greatest things that I learned at Enterprise was, one of their core beliefs was that customer service is a way of life. Right. And I really took hold of that and believed in that. And I, worked in the restaurant business throughout college, and I've always had a foot in the door of customer service. And I think being very passionate about what you do, providing a very high level of service, a very high level of, education to clients, like when they're coming in the office and making sense of what they have going on. And then after they decide to come on board and be a client of ours, we send out a commentary every Saturday morning at 8:00 that talks about what happened in the market the last week, big developments. We get the Fed interest rate meetings this week, Trump-Xi tomorrow. So really just empowering them through education and understanding of what they have, the environment that we find ourselves in, and then what our thesis is and how we have hope for the future and how we can kind of, take that thesis and blend it into our clients' portfolio so they can be a part of it too. And if not just for themselves, then, for their future generations. I had a tremendous amount of skepticism back in January of 2023 when I announced to my clients that we were taking a position in Bitcoin. This was after a 75% correction in 2022. But now, you speak with any of my clients and there's a complete comfort level, at least a relative understanding compared to, somebody that you walk past, at a restaurant or up and down the street.
And for someone listening, because I'm one of these people, was more so before crossing paths with you, like there's a lot of different we'll call them altcoins, cryptocurrencies that are on the market, Ethereum, Bitcoin Cash, Bitcoin, whatever. It goes on and on. Dogecoin, what's going to the moon next, the next thing that they came up with, right? And enough people come around and put their dollars into it, then it has value, quote unquote. So for those not watching and listening, but why Bitcoin instead of all those, number one? And number two, I mean, to me, it seems really difficult to imagine a world that exists in which the U.S. government doesn't finally come up with, and maybe they're already working on, U.S. dollar currency or some kind of coin that basically they then get American people to believe this is the better one. And the reason why I say this is I look at like war profiteering in the history of this country and the government saying, hey, you got to buy bonds, you got to buy bonds. This is a safe place for you to put your money, really because they wanted to fund the war machine, you know what I mean? And to your point, building up the military to have a stronger presence so that the reason why you're here really at the end of the day is just because I don't want to get nuked.
And I don't think we'll ever get to that point. I think that, countries realize and understand at this time that like any escalation is going to lead to some, isn't going to have a good outcome with the ability to have nuclear weapons, right? So that's a significant problem. Sorry, what was the first part of the question?
Well, what I was saying is why doesn't, forgive me because I did go out a little bit further on,
okay.
Like what governments do to really keep people enslaved under the guise of freedom.
Yeah, I think everything that happens, every event that takes place radicalizes a group of individuals, right? And people, they don't see it until they're kind of forced to see it, right? And for me, like it took COVID for me to really understand or build a belief as to what I think is unfolding, right? And it's contrarian to the majority of how people view things. I mean, a majority of people say, believe if the government says this is good for you, then they're going to do it, right? So like you're talking about cryptocurrencies. So Bitcoin is the king. It's been around the longest. It's been around since 2009. It's a proof of work network, which requires energy in order to fund and facilitate the network. And there is no founder. So the Bitcoin, it's crazy. Bitcoin is the greatest performing asset in the world over the last 16 years. Bitcoin doesn't have a marketing team. Bitcoin doesn't have a CEO. Doesn't have a product.
It's humans.
Right. This is a total grassroots, bottom-up technology adoption to where now you have the United States announcing a strategic Bitcoin reserve. You have BlackRock, launching the most successful ETF in the history of ETFs, in the Bitcoin ETF in January of 2024. You have Jamie Morgan, who Jamie Dimon at JP Morgan.
Yeah.
Thank you. Who like 3 years ago was saying Bitcoin is a pet rock. I'm never talking about it again. And just this week, JP Morgan is offering crypto for offering collateral for your Bitcoin, right? Every other crypto project out there, for the most part, is some form of security. You are investing dollars in an expectation of return reliant on the efforts of a third party. That's how you define a security, right? Like the Ethereum network. I mean, they switched from proof of work to proof of stake a year ago, right? That's a complete change in the entire system. So how can you invest in this long term when you have a set of developers that can go in and can make changes, without agreement by the operators within the network. Bitcoin is one of the only cryptocurrencies or crypto assets out there that is absolutely finite and scarce at 21 million. Most of these other crypto assets have unlimited supply. Most of these other crypto assets have a team of founders that pre-mine tokens. So let's say, like XRP, for instance, the not only are they missing a portion of their blockchain from the early days, which is suspect, their blockchain history, but the founder of XRP owns, or the team owns 40% of the existing supply in the market today, right? So their ability to dump on the existing investors and shareholders is a concern, right? Whereas Bitcoin, Satoshi Nakamoto gave us this gift and then completely walked away from it. So there is no individual you can call. There's no, team of developers or founders that can have their door knocked on to make a change. And because of the way nodes and miners are set up, it is decentralized all across the globe, right?
I think, and that's the part that people have the skepticism around, or maybe I did, is like the whole aspect of where is it? And as a real estate guy, like we buy and sell things that people can see with their eyeballs. And I suppose you could drive somebody to a facility where Bitcoin is being mined and being like, your Bitcoin's in there if you want to see something. You know what I mean? But like you made a key point there, which is it's a finite resource. There's no founding team that's got any incentive to creating more of this or somehow messing around with it. It's just going to continue on this path until 2140 when the last one's made, and then that's all there is. And people will still be able to buy portions of that, but their cost of access to that is in time going to go up and up if they're trading dollars for it.
Correct. And I think, the natural state of the market is deflation. Right? Like technology should make things cheaper over time. I think that's a pretty fair, reasonable argument, right?
Well, we live in an age of abundance, which isn't abundant for everybody,
right?
Because it's only a function of the education you talked about earlier, whether or not somebody is able to have that abundance by learning about these opportunities and then furthermore executing and taking action on it.
Well, not only that, but like in a sense, you shouldn't have to. Right? Like if you're on a Bitcoin standard, everything gets cheaper as time goes by, right? And you're not chained to a 40-year career working, 40 hours a week for somebody else to build their Fortune 500 company, right? You have all the time in the world to do whatever you want to do. And there will be people that solve problems and build bridges and build homes and, there will be consumption, right? But it's just it's the antithesis of the world that we live in today, where you have to get up at 7 a.m. and drop off your kids at daycare, and you have to go work 8 hours a day, and then pick them up at 5:30, and then scramble to get them fed and tubbed and in bed, and then you sit on your phone for 2 hours, and then you do the same thing tomorrow, right? Like that's not what we were put on this earth to do. I don't believe, right? And I think having a true deflationary money that is not controlled by individuals will usher in an era where your time is abundant. Your time is the most abundant asset that you have, and everything gets cheaper as time goes by. So it's really hard to wrap your head around what that looks like, especially being rooted in the existing system that we're in today. I don't know if I'll be around long enough to see us make that transition, but I think that's where this ends up. I mean, I think it took us 2,025 years, really 2,009 years to discover the most, the perfect money. I mean, we went from yak stones to seashells to glass beads to, gold bars to fiat currency. And now we have, as Henry Ford predicted in 1913, we have energy money, money that is backed by energy, right? So it's just a profound. It's a
So the
profound
only thing
idea.
that would shut the lights off on that, no pun intended, is lack of energy.
Yeah, and even in that environment, like as soon as the energy comes back on, the blockchain picks back up, right? But you could argue, well, the seven biggest stocks in the S&P 500 make up 30% of the S&P 500, and they're all internet stocks. It's Nvidia, Google, Amazon, Facebook, Microsoft. It's like, what happens to those guys if the internet goes out, right? What happens to online banking and our ability to transact value? I mean,
Right.
Yeah,
We had a squirrel that fell on the electrical line at my house a couple months ago, and we have a group chat for the neighborhood. And within like 2 minutes, it was exploding. Like you thought everybody was going to die because the electricity was blown out in the neighborhood because that squirrel fried the transformer, right? And I'm like, well, good thing I don't have to get my Bitcoin right now, but you better bet damn sure that CMP was there within an hour turning it back on. You know what I mean?
We can't
and everybody was happy again.
Yeah, we can't live without it, we can't live without it. So I think it's not going to be a straight line, and I think at the end of the day, Bitcoin is really more of an ego test, I think, than it is an IQ test.
Yeah, I mean, and to that point, I mean, you've laid this out for me. The only thing between me owning Bitcoin and not is in between my own ears at this point, and haven't still bought any yet. Still kind of like funny. We just did a segment on people who are waiting for interest rates to go down to be able to buy a home. And I find myself in a similar thing. Like once it gets to 100, man, I'm buying one, somehow,
Yeah.
But it's like, what does it matter if it's 100 or 115 if 10 years from now it's worth $1 million? It doesn't matter.
Let me put that into perspective for you, okay? There is $1,000 trillion worth of wealth that exists in the world today. I think I shared this chart with you at my office. If you add up all the real estate markets across the globe, the bond markets across the globe, the stock markets across the globe, all the value in fiat currencies, fine art, collectibles, gold, Bitcoin, you get $1,000 trillion worth of wealth.
The jewels that were stole from the Louvre.
There you go. Yeah, you can probably add that on there. Or take it off, I guess, maybe. Bitcoin today is a $2 trillion asset. Gold, as of its most recent move, is a $30 trillion asset. So gold today is 3% of all the wealth that exists in the world today. And I think gold has the potential to be the new, at least for the short to intermediate term, the new neutral reserve asset of the world as we shift away from treasuries and assets that have counterparty risk. But gold is 30 trillion, 3% of all the wealth that exists in the world today. Bitcoin is 2 trillion, which makes it 0.2% of all the wealth that exists in the world today. And I already explained why Bitcoin is exponentially better than gold in every capacity, not only today, but for where we're going as a future economy and civilization. So Bitcoin has a 15x in front of it just to get on par with gold, right? Which puts you at $1.5 million a coin, assuming gold doesn't move. And at that point, assuming everything else stays static, at $1.5 million a coin, Bitcoin is only 3% of all the wealth that exists in the world today, right? So even then, in my opinion, Bitcoin is a better long-term store of value than bonds, than real estate, than stocks, especially on a risk-adjusted basis. So
is the epiphany of that what could cause real estate prices to go down drastically?
I think you're going to see that in time as more people realize. Because why would I hold a piece of property in Florida that's going to get hit by hurricanes and has ridiculous insurance and carrying costs and property taxes, and I got to deal with tenants that are destroying the place or Airbnb regulations and as soon as Bitcoin can be used as collateral and you can get liquidity out of the asset without having to sell it, which is similar to real estate, why would you own real estate?
Right.
And in my opinion, that's a beautiful thing, because then if people say, well, I'd much rather store my time and energy in this asset that is absolutely finite and scarce, I take it anywhere in the world, send it anywhere in the world, I can buy a fraction of a Bitcoin. You can't buy a fraction of a piece of real estate, generally, right?
Right, unless it's subdivided with all these rules and regulations and planning boards and blah, blah, blah. Whereas if you're a millennial, 10 years from now, you're 50, you're like, hey, I want to buy 1/10 of one Bitcoin. And at that time, the Bitcoin is worth $3 million. You can still buy $300,000 worth of Bitcoin, but you can't go and buy 1/10 of a $3 million real estate property unless you get into some kind of timeshare arrangement.
Or if they tokenize it with these other crypto assets, which they've talked about doing, But, its characteristics make it, in my opinion, just the greatest long-term store of value. And it's going to bring back in time, I obviously could very well be wrong, it will price real estate based on its utility value and not on its speculative, investment value. Like if you want to own this home to live in it and raise a family, right? But otherwise, and you could argue for cash flow, but even then, like I think the tenant risk can offset, the headaches of everything that goes along with being a landlord, right? You can never really get away. You got to pay for a third party to manage your properties.
Yeah.
Like you're always getting phone calls in the middle of the night.
It doesn't take a rocket scientist to figure out how it's going to be an increased percentage of institutional owners of real estate that just want tenants, because then they're on this flywheel where they have to keep doing it because they can't buy something else because the prices are too high relative to their wages. But then that creates an environment of a bunch of people who feel like they have no skin in the game relative to what it is.
Right.
So to your point, those people living in an apartment paying rent could still buy Bitcoin.
They could buy
and have a store of wealth like they were owning real estate. Maybe better off than the landlord because they don't have to deal with the broken pipes and the insurance rates going up and all that.
100%. And they can get up and move tomorrow anywhere they want and not have to worry about anything. They can take all their wealth with them. I mean, you can buy, that's the thing. Like one Bitcoin contains 100 million Satoshis, which is kind of like a dollar has 100 pennies, right? So Bitcoin is divisible to the 8th decimal point. So you can buy $1 worth of Bitcoin. I mean, if you buy $5 worth of Bitcoin and Bitcoin compounds at 25% a year for the next 20 years, I mean, you're going to have like $5 million at $5 a week.
Yeah.
Right? And again, like the autonomy and the control and the freedom that you have, right? Because it's like, hey, go ahead and increase the debt to 40 trillion, to 45 trillion, blow out the deficit and debase the currency. It's like, I'm not playing that game anymore. Like I'm storing my wealth in this system over here that cares about me, right? And is designed to protect my time and energy. Now, obviously, Bitcoin needs to stay, decentralized and secure, and it's not, an absolute guarantee that this is going to be successful in the future because you can't guarantee anything aside from we're all going to die at some point.
Right. And pay taxes.
And pay taxes, and even then, I mean, who knows, what that looks like. But
it's true, man. I mean, you're absolutely right in which, when you start to step back and look at this, less of a cynic and more of just saying, hey, I'm going to accept that this is what's happening because it is, and I'm going to do something about it because it makes financial sense to do that based on these things. You see a world in which this really does create kind of, I don't want to call it like an utopia, but I'll use that word, in which everybody can participate.
And there will be haves and have-nots, right? I mean, you're not going to be fit if you don't eat well and exercise, right? But the opportunity is there for everybody to eat well and to exercise, right? And it's the same thing with this system. Those who come to it early and give it its time and energy and support it in its infancy will benefit more from those who didn't take the risk and wrote it off and believed the opinions of somebody else as opposed to their own research. And then 20 years go by and, what they could have bought back then is, they can only buy a fraction's worth today, right? But the point is the system is fair, right? The system is fair. Every 10 minutes, a certain amount of Bitcoin is released to the market. And I know to the year 2140 exactly how much Bitcoin will be in existence. You can ask me any year. I mean, not, right now.
And nobody can come in and change that.
You need 51% approval from participants in the network.
Oh, yeah.
So it is a network of the people.
Yeah.
Right?
Yeah. Who are all over the world.
Correct.
With different
and
beliefs
they all have the same,
governments.
and the only reason they invest in Bitcoin is to store their time and energy in an asset that is finite and unconfiscatable, right? So who votes to change that, right?
So you see in the future a world in which a lot more things are bought and paid for with Bitcoin.
I don't. So a lot of people get confused about that, where they say, well, cryptocurrency, but I can't go to Starbucks and buy a coffee with Bitcoin, right?
Well, somebody bought a pizza, right? They probably regret that.
They probably regret that. Yeah.
Some guy bought
20,000 Bitcoin or
20,000 Bitcoin for a pizza.
Yeah.
That's an expensive pizza.
It is, but it was,
like
he'll forever be remembered as, that was like the first transaction that gave Bitcoin, value.
Yeah.
Bitcoin Pizza Day. But the way I look at
I'd still rather have the $4 billion.
Of course. Yeah, that's one that you have a hard time letting go. But if you think about it from first principles, like if there's only going to be 21 million of these things, right? And it's appreciated at 150% a year for the last 15 years. And I think you're probably going to see, I would venture to guess somewhere between 25 to 30%, compounding interest, compounding growth for the next, for the foreseeable future. As the asset grows, it takes more energy to move it. But why would I spend that Bitcoin for a cup of coffee or a pizza, right? If I can just spend my dollars, which I know are going to lose value, so I might as well get rid of them, right? Like even if somebody's offering to accept Bitcoin, the odds of me paying for it, something in Bitcoin, are very low because I value my Bitcoin like I value my time, right? Unlike dollars, which come and go and, lose value on a guaranteed basis every day. So I'd rather get rid of those dollars to purchase goods, store my time and energy in Bitcoin. And then at some point, later down the road, you use the Bitcoin as collateral, and that's a way to get liquidity out of the asset.
I think this would make more sense to people if they had $100,000 in a safe. And every year someone showed up and said, hey, you need to open your safe. We're getting a metal bucket and going in your backyard, and we're burning a percentage of what's in there equivalent to inflation, real inflation.
Somebody had said, like,
people would freak out.
Totally. And that's the thing. Like, I didn't really understand inflation. Like Series 65, college graduate, and I'm not saying that like I deserve to know that by having those, credentials, but like I really did not understand inflation until COVID. And that interview on 60 Minutes with Jerome Powell, they said, you basically just print money. Is that right? He goes, well, yeah, we print it just digitally. Right. And I'm like, no man should work for what another man can print. Right. So, it was just a complete revelation, and it changed my life, changed my outlook, my hope for the future. It's changed my business. It's changing my clients' lives and the opportunities that they have in front of them.
And when someone comes to see you, just so that those are listening that might want to work with you, which I think would be a great idea, you're not selling them Bitcoin, because you educate them on it, right? And then they make a choice of whether they want to do it or not.
Yeah. So for us, like the way we work at Sovereign Wealth Management is, we have a fiduciary responsibility to do what's in the best interest of our clients.
Yeah.
Period. Right. I receive an advisory fee to manage portfolios. I don't, in the market for market-based products, we don't sell, mutual funds and earn commissions. There's no conflicts of interest in what we do. Let's say I charge 1% to manage a portfolio. Well, that tells the client right up front that every decision that I make is in their best interest. Right?
Because you get a percentage
I'm
of
paid
it going up
on the bottom line.
Yeah.
So as much as they want to participate in favorable markets or be, in different asset classes that have, favorable trends looking forward, I want the same thing, because when they make money, I make more money. Same thing true is on the downside. When the market's challenged, we're incentivized to do all we can to keep a level head and respond to the situation appropriately, because as much as my clients don't want to lose money, I don't want to take a pay cut. And, for me, I've studied Bitcoin for 4 years now. I mean, I first started studying it in July of 2021. I got into Bitcoin purchase-wise in August of 2021. So, my challenge to those that come in and don't want to invest in it, without saying it bluntly, is like, I can assure you that you likely haven't taken the time, to understand the asset at the rate that I have, right, as the advisor. And I think you can make the same argument for lawyers and people in the medical facility.
Yeah, doctor.
Realtors,
when you show up to their office, the people get white coat syndrome for a reason. It's like these people know more than I do.
If you have a life-threatening situation going on, you're probably going to take the guidance of the professional, right? And so for us, Bitcoin is a mandatory part of the portfolio. I mean, it's been around for 16 years. It's the best performing asset class in the market. It's being adopted by corporations, nation states, ETFs. The big banks are getting into the space. You're going to get clarity with, the Market Structure Act, likely by the end of the year. This thing is here to stay, right? And you have more to lose by not embracing Bitcoin than you do from embracing Bitcoin, in my opinion. So, it's built into our portfolios at Sovereign Wealth Management. We make changes when we feel like it does make sense to make a change. But at the end of the day, it's a core part of what we do, because it also allows us the opportunity to educate our clients on this thing and really give them good insight as opposed to what they may be hearing elsewhere.
So, Jeff, we've had a wide-ranging conversation today. Thank you very much for all this insight. As people are looking to get more information about what it is and what you do, where should they look?
Yeah, I think the best way is to check out our website. So you can find us at retiresovereign.com. That's SOVEREIGN. Not big in the social media game, so no Facebooks or anything of that nature. But you can check out our website. Give us a call at 207-530-9008. Info@retiresovereign.com. We have an office located right here in Augusta, 160 Capitol Street, and we also have a satellite office up in Bangor. So,
cool.
Serving clients all across the state, clients all across the country, and happy to be a resource and help however we can.
Yeah, I'm glad you mentioned that about across the country, because we do have, a national audience with this program, and people can really trust you to give them the straight shooting answers. Like what I love about you is you don't beat around the bush, and you're not afraid to say, hey, look, this is how I view this. You take it how you want to take it, but based on my research, this is what I found. And I think that approach is really refreshing, particularly in the environment that we live in today. So, Jeff, thank you for all that you do to help empower and educate people to make the best decisions for their future. And thanks for being on the show today.
Yeah, thanks, Matt. I really appreciate the opportunity to be on the platform.
Investment advisory services are offered through Foundations Investment Advisors, LLC. Foundations, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Any discussions of specific strategies are for informational purposes only and have been provided to help determine whether they may be appropriate for your specific situation. If applicable, the primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstances. Comments regarding a particular client's experience may or may not be the same as another client's experience. It is not an indication that any client or prospective client will experience the same or higher level of future success or performance. Foundations only transacts business in states where it's properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Nothing herein constitutes a recommendation that any security, portfolio of securities, or investment strategy is suitable for any specific person. No legal or tax advice is provided. Please review your retirement tax and legacy planning strategies with a legal tax professional before transacting or implementing any strategy discussed herein. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rights and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. This is not endorsed or affiliated with the Social Security Administration, any federal Medicare program, nor any U.S. government agency. If applicable, we do not offer every plan available in your area. In contacting us at the phone numbers provided here, and we'll direct you to a licensed insurance agent. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on any or all of your options. All rights reserved. This content is intended for informational and educational purposes only. The views, statements, and opinions expressed here are those of the author, Sovereign Wealth Management, and not necessarily those of Foundations and its affiliates. Crypto and other crypto-related asset investments are highly volatile and may be regulated. Crypto can be susceptible to cybersecurity and liquidity risks, and its value can also be negatively and materially impacted by regulatory and/or legal developments. It is for investors with a high risk tolerance who can withstand the sudden and potential loss of their entire investment. Prior to investing in crypto, investors should fully consider the risk involved and whether it's appropriate for them.